Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. It's a good time to run you through what's going on as we speak. The Nifty has seen a bit of a bounce, and from yesterday's lows, well, the bounce has been quite strong because now the Nifty again is approaching that resistance level of around that 10,950 odd mark. What's doing well? Well, in the last few minutes, you've seen a couple of stocks that have bounced up. Maruti has moved higher with a gain of close to 0.5%. I think L&T as well has seen a bit of a bounce. So good going. Few of these stocks, they're really moving higher, and that's what's helping the Nifty. Even the mid-cap index, at least for now, has moved into the green, and the Nifty Bank as well up 120 points. Hey, Surbhi.
Good afternoon, Nigel. Yes, absolutely. I think it's a good day for auto, second day running. I mean, there's some steam that seems to be coming back over there. And the Nifty Bank, with that surge, is looking better. ICICI Bank is still negative, mind you. SBI has moved off the low, so that's a bit of help. The minor gain on HDFC Bank today. So let's see if this really indeed picks up. But right now, 10,940 on the Nifty. On that note, let's get you the headlines.
Well, the Nifty has moved higher and we're holding closer towards those levels. So let's see whether or not we can go ahead and brace that level of around 10,950 odd. Hero Motocorp, as Surbhi said, autos having a good day. Hero Motocorp as well as Maruti and Maruti, both those two moving higher. Even Eicher Motors, brilliant move being seen on that stock. Second day running, I think that stock is gaining. So good news. And the mid-cap index that's otherwise seen a lot of selling pressure is using this opportunity to at least participate as well. But there are plenty of stocks that are moving and shaking around, and it's almost lunchtime, so time for a pizza. Let's kickstart it with Mangalam on Jubilant Food. Hey, Mangalam.
Hi, Nigel. So the stock down about 5% on account of the fact that the National Anti-Profiteering Authority, or NAA, has found the company guilty of not passing on GST benefits to the tune of around 41.5 crore. Remember, November 15, 2017 was when the GST rate on restaurants was reduced from 18% to 5%. Without the input tax credit. So that was something that is taking the sentiment lower on Jubilant Food. However, we're getting some clarity from the company. They said that they follow the spirit of the law and they passed on the price cuts immediately. However, the losses that were incurred by the company were on account of no input tax credit was a lot more than the price cut that the company gave, and that is something that the NAA hasn't clarified or hasn't taken into account with regards to this number. So let's see, we haven't yet heard the end of this, but fundamentally nothing's changed for the company. Third quarter results were very good. Revenue, EBITDA as well as net profit beat estimates, and the stock had seen a rally, some profits taken off there.
Okay, that's Jubilant Foods in focus. Right now, we need to cut across. Lata is in conversation with Professor Edward Altman, Professor of Finance, Emeritus at NYU Stern.
Well, I have with me an extremely interesting guest, Professor Edward Altman. Professor Altman has developed the Z-score, which is actually a score that helps you look at a credit strength of a company and tells you whether it will get into bankruptcy, basically measuring a company's leverage, liquidity, solvency, all externally available data, and predicting whether it will get into bankruptcy. So at a time when India has, 15% of banking assets as bad loans, I think he is exactly the man we want to hear. Also, Professor Altman would be perhaps the right authority to tell us where is the global credit cycle headed, and are we seeing too much of money available to global corporates as well? Professor Altman, I can't tell you how important it is to hear you at this juncture, both because of Indian reasons and global reasons. But the global question first, sir. Where are we in this credit cycle? It looks like this benign cycle has gone on for 9 years now?
That's correct. We are in the longest benign cycle in modern financial history. I'm talking mainly about the United States, but I think you can allocate that to a good part of the rest of the world. So we are in the 9th year, and the longest before that was 7 years. And a benign cycle needs to be very carefully defined. People kind of have an idea, but I define it as low default rates, high recovery rates if there are defaults, low interest rates and spreads over the government rate charged to lenders and borrowers, and finally high liquidity.
Okay.
If all of those four ingredients are here, then you're in a benign cycle, and we are still in it.
Okay.
And the question is, when will it end? Exactly. And what will be the impact?
Okay, that exactly was my next question. You know, when last October or September, we thought that the U.S. 10-year yields went up to 3.1 and higher, and we thought that the Fed would increase rates. It looked like the cycle is going to end.
Yes.
But now it looks like it can go on for another couple of years. What do you think? Where will it end?
Well, I do think it can go on. And it's not really when it will end, but when it does end, what will be the impact is much more important. But probably we are with the benign cycle for at least another 12 months. Many of the economists in the United States and in the World Bank and IMF are saying there's going to be a reduction in growth in the economy, and many are saying a recession will take place perhaps in 1 to 2 years' time. If we have a recession, but even if we don't, but if we have it for sure, there's going to be a tremendous impact on defaults and the size of companies that default, more than perhaps we've ever had, because of the incredible buildup in global debt in the last 9 years.
Okay. But do you see any red flags, any risks to the cycle?
Yes, of course. First of all, non-financial corporate debt as a percentage of GDP, so it's like debt to the cash flow of a country, is now almost 100%, whereas 20 years ago it was half of that, and 10 years ago it was a third of that. So it's 2/3 of that. So it's much higher than that. Some countries, household debt has increased dramatically. I just came from Australia.
Okay.
That's one example. Sweden, Norway, Denmark, all of Scandinavia are very concerned with that. So it's the debt levels relative to the ability to pay back that debt that is the real question. And no question, if we have a recession, the ability to repay is going to go down.
Okay.
But we found in some cases that the default rates on company bankruptcies actually starts rising before a recession.
Oh.
And I'm predicting this year that we're going to see an increase in default rates in the United States, more than perhaps we've seen in the last 10 years. But not necessarily not at crisis levels, not yet.
Okay, fine. We'll be happy with at least that prediction of yours, that we're not at crisis levels. But it's 50 years now, that 50 years ago you put forth
Yes,
your
it is.
Altman Z-score. What are the key learnings? I mean, there are a lot of corporates watching you, a lot of fund managers watching you, high net worth investors watching you. What are the key lessons that you have learned in the 50 years of applying your model?
Yeah, interestingly, we've learned a lot, but still we have defaults, we have bankruptcies. Everybody knows the model, but is not necessarily using it. And they may have other objectives for making loans rather than the Z-score. But the Z-score is totally unemotional. It is a conceptual model that is also empirically based, and our accuracy has been close to 90% within 2 years of bankruptcy. But this is mainly tested in the United States with perhaps still very good levels. I've tested it on Indian companies, and of the 10 companies I've looked at, 9 of them clearly would have been predicted 2 years before, and their ratings were very high 2 years before and 1 year before, which is a real problem.
Oh, that gives me 2 further questions, especially on rating agencies. But why are you here then? Has the market regulator or the banking regulator invited you?
No, it's interesting. My wife was saying she's going to go to a continent that starts in A and ends in A, namely Antarctica.
Okay.
So I said, okay, I'm going to go first to Australia, also A and A. And since I'm already this part of the world, I always love to come to India. I've been here now 5 or 6 times. I find the audience is the most engaged, well-prepared, and enthusiastic, almost from anywhere else I lecture in the world. So I said, it's time for another trip there. And by the way, I also have some contacts here. And so I've given seminars for bankers so far through Kafral and the central bank, the CFA.
Yes.
I'm going to be speaking to the equivalent to the SEC, the SEBI, and then a couple of companies like Sri and one of the rating agencies, Akute, that I'll be talking to. And so I'm here mainly to learn, but also if I can add any value, I'm happy to. And meeting the bankers, etc., has been a very revealing experience.
Okay. Well, you may know then that India is having a huge problem of bad loans,
Yes.
which have been recognized much later than they ought to have, and so it's an accumulated problem.
Yes.
What are your observations? At the moment, standing at probably 13% of total outstanding debt for state-owned banks. It's the government-owned banks
Yes,
that seem
I
to have a
understand.
slightly bigger problem than private-held
Than the
banks.
private ones. Well, those levels are unsustainable. I've seen before countries that had high growth, as India does. Let's take South Korea back in the late 90s. High growth, but it was mainly financed by cheap debt financing or relatively cheap debt financing, which got the companies into trouble. If the country cannot bail out the banks with these unsustainable levels, then it's very bad news for the country in the long run. So these NPLs must be reduced. And of course, one of the ways to reduce it was with better models and to listen to the models. India, like many countries, has a great history of helping companies, but let's not forget that you need a credit culture. You must listen to the models and not make loans simply because it's going to add to the growth of the country. Korea was growing at 10% a year for 10 years and then almost defaulted in 1997 once the economy went into a bad state.
So the wrongest thing would be for governments to give loan targets to companies, to banks.
Well, it's okay to give some targets, but they have to be realistic ones for what the country can do under normal conditions. But that's correct. If the country says lend at any risk simply to grow the economy, that's a huge mistake in the long run. And I think countries like China found this out to be the case in the early 2000s, maybe again now. And even in the United States, but we don't have the incentive talking to banks. In fact, the banks in the United States do one thing that a lot of banks don't do. They write off the NPLs and sell them quickly rather than keep them on the balance sheet, these zombie companies. And that's a mistake.
Okay. So would you, in India we don't have, a market for junk bonds. You think that is the biggest problem that doesn't allow banks to recognize distressed loans because they don't find a seller, a buyer?
Well, that is an issue. You need a supply and demand. You want to sell the loans, but you have to sell it at a fair price and have someone to buy it. I understand, however, that you have a new bankruptcy code here, and that's going to facilitate the sale of loans and also hopefully get interim financing for companies to restructure to both Indian and non-Indian, what we call distressed investors, sometimes affectionately called vultures. Vultures play a very important role both in the jungle and in the financial world because they set a price for these non-performing loans or defaulted companies. You absolutely need them, and it's not just junk bond companies that buy them. It's distressed investors. And that's an area that I've looked at now for over 40 years in the United States. It's a huge industry.
Okay, so that is Professor Altman talking about India's tryst with bad loans and stressed balance sheets. He seems to be holding up the IBC, saying it's probably a step in the right direction, and also talking about several other sort of important points with respect to dealing with bad loans, saying they must be reduced. Otherwise, it's bad news for any country. All right, we will get you snippets of that conversation through the day, and of course, watch out for the whole interview as well as it plays out. Right now, a quick break. On the other side, we focus on some more stocks that are buzzing in trade.